Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, Toyota bets on new line of combustion engines in a challenge to Tesla, as well as that Israeli tanks enter central Rafah. We've got lots to talk about on the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. The first article to talk about is to do with Toyota. Now, Toyota has now published their plans for a new generation of internal combustion engines during a rare joint appearance of the heads of Toyota, Mazda and Subaru. This comes in a new bet by Toyota that the world will continue to need older technologies despite some buyers shifting towards Tesla and other EV manufacturers. Now, this is a very interesting article on a topic which we've kind of covered quite a few times, to be fair, on this channel. Less so to do with the actual specific topic which is focused on in this article, but I think it relates greatly to this wider topic that we've been covering a lot recently, which is ultimately, the EV industry, EV cars and that kind of thing. So, electric vehicles and the entire technology around that, but also the kind of changing investment and the changing, demand across the world for such EVs. Now, I think the kind of key thing that we always talk about, well, the kind of key focus usually to do with EVs is on the company of Tesla, right? Tesla is that kind of leader within the industry, some would say, or really the figurehead of the industry. And all the developments that we really see within the EV industry are often somehow related to Tesla or directed somehow towards Tesla, as Tesla has brought with it a great deal of hype and has kind of represented the future of cars and the automobile manufacturing industry in general. And as a result of that, Tesla is always kind of a key point of discussion, and that's something that has been a key point of discussion on this channel, as well as we frequently covered Elon Musk, but especially Tesla with their own issues recently, especially due to changing demand within the current macroeconomic climate, but also the kind of changing trends to do with cars and that kind of thing. Now, the kind of key issue more recently for the likes of Tesla and other EV manufacturers is ultimately that there is growing competition and kind of, or at least somewhat slowing demand slash demand growth is kind of slowing down somewhat, stagnating. And this is a massive change, obviously, since, over the last decade, really, we've seen a massive improvement in the number of EVs on the roads, as well as, the kind of availability of kind of EV models for consumers to buy. And as a result of that, we've seen, the supply expand for EVs, but also the demand, jump dramatically to the upside. And that came in line with a great deal of changing government policy, but also a great deal of hype and trends, and it does seem like now that trend is somewhat fading out to meet somewhat of a new reality with regards to the automobile industry, where we're kind of now reaching this equilibrium where the kind of demand for EVs is slowing down, but at the same time we're seeing kind of this growth, as we'll get into this article, as we're seeing this growth in the interest in hybrids, so this kind of combination of combustion engines and electric vehicles. With regards to growing competition, though, that's kind of been a key issue for Tesla, especially within China, where we know a massive increase in the Chinese domestic market production of EVs has dramatically challenged, of course, Tesla's share within the market. Now, Tesla, of course, has a massive share within the market. I believe 10%. I could be wrong, so don't quote me on that. But Tesla does have kind of a strong percentage within the global EV world, but especially China, who of course are the second largest kind of EV consumer. And as a result of that, it's important that Tesla kind of places themselves in that area for their kind of distribution. Ultimately, though, we've not only had issues with competition, but also government policy. We know that Tesla struggled to kind of implement their kind of unique AI technologies into their cars within China as a result of kind of the CCP's regulations. That's kind of recently changed, but still that's been an issue for Tesla. And now kind of this new development of Tesla achieving the ability to implement that technology is ultimately because competition is so strong at the moment for Tesla. As you know, we are seeing this kind of decline in EV sales around the world, and as we can see here, you know, we have the likes of Toyota and these more traditional car manufacturers which go back far more years than Tesla, ultimately, you know, pushing themselves and investing greatly into the electric vehicle industry. And as a result of that, Tesla's really struggled to kind of keep their name or keep their head above water, it does seem, as a result of the kind of changing market trends. Ultimately, though, what we're talking about here with Toyota is the topic of hybrids, which I did allude to, with all those a part of the joint appearance, pledging to invest in fuel-based technology, which will ultimately benefit hundreds of suppliers which are struggling with the current shift to electric vehicles across the world. The reason for such a shift in Toyota's priorities and the change to focusing on combustion engines can largely be explained by the lack of sales of fully electric vehicles. Can largely be explained by the sales of fully electric vehicles slowing as a result of concerns over costs and the lack of charging networks. With the effect of such changing demand causing a surge in demand for hybrids, which is why we're now starting to see global car manufacturers increasing their investment into such car models which combine batteries with fuel engines. In Toyota's statement, it was made clear that the new engines will go into production around the time that the updated EU emission regulations are to be phased in from 2026. That said, the Toyota chief technology officer did also note that the investment into the new hybrid engines was a magnitude smaller than the funding that was being poured into EVs. This comes as Toyota remains one of the slower car manufacturers to explore EVs. So this article is obviously very interesting because it's talking about this kind of it's talking about Toyota, who ultimately have been slower to kind of transition to this kind of EV market trend, which is developing and really has spiked over the past few years, but somewhat slowing now. And because Toyota's kind of taken their time some more, as we've spoken about before, Toyota's seen great success recently with regards to car sales in comparison to someone like Tesla or a firm like Tesla, which has really struggled during the current market conditions and with the current market trends. So that's kind of an interesting article to kind of relate to that and ultimately contextualize the current changes that we're seeing within the automobile industry. And it really sets a kind of interesting outlook for something like Tesla, which pride themselves on their kind of unique focus on EVs, when we of course do have the likes of Toyota and other car manufacturers which are still, keeping their eggs spread across a few baskets and still keeping some interest in the idea of a combustion engine, which of course Tesla can't, of course, empathize with, or I don't know what the word would be for that, but ultimately we're seeing this disparity within the industry. That's all to talk about in this article, though. Next article to talk about is to do with Israeli tanks in Rafah. Now, the IDF stepped up their offensive into the city of Rafah yesterday as tanks were sent deep into the centre of Rafah despite international condemnations and warnings. This comes following an Israeli airstrike over the weekend that killed dozens of civilians. Now, of course, we've been covering this conflict since the start on October the 7th. And since then, of course, we've seen great developments in the way the kind of conflict has progressed and what sort of peace deals have been agreed upon and then not agreed upon and that sort of thing. And all of this this entire topic really, and the conflict which is raging, of course, in Israel and Gaza, has had wide effects on world tensions and also, kind of the wider economy, which which is why we of course need to cover it on this channel. As we've seen, of course, within the Red Sea and Gulf of Aden, those Houthi strikes, or Houthi missile and drone strikes on, of course, merchant vessels which were traveling through the passage towards the Suez Canal, and those ships obviously act a part of the world economy and serve, of course, corporations and consumers spread across the world. And as a result of that kind of conflict, as a result of this conflict, and as a result of the Houthis kind of instigations within the Red Sea and Gulf of Aden, we've ultimately seen a dramatic rise in the insurance costs for ships, as well as the cost of shipping in general, which of course we covered in yesterday's morning market briefing, and that's just one of the few ways that this conflict has already affected the economy massively. And of course, the kind of key topic that we always relate this topic to is the issue of a regional war, or the possibility of a regional war breaking out in the Middle East. Now, we very much neared one, it did seem, going back a month or two, to when, of course, we did see the kind of back and forth strikes between Israel and Iran, with the kind of Israeli strike, or suspected Israeli strike, on the Iranian consulate in Syria, Damascus. And in response to that, we of course saw Iran launch their own strikes towards Israel for the very first time from their own territory. And then in response to that, we saw Israel launch strikes from their proxy networks into Iran themselves, just as Iran also tried to do. So that back and forth, many were worried over the chance of that kind of breaking out into a regional war. We never saw anything kind of come of that following those Israeli strikes, and things have calmed down somewhat. But that said, we must of course mention the recent death of the Iranian leader, which brings back the idea of a kind of regional war, especially when we're now talking about this kind of controversial move now by the IDF to enter Rafah, which is creating a great deal of international condemnation for Israel and Netanyahu. So there's a great deal of kind of worry now that is growing, I believe, over the topic of a regional war, and of course that will have dramatic effects and dramatic effects on the markets, and especially oil, which we'll come to near the end, with the IDF yesterday pushing further into Rafah by establishing positions near Rafah's centre using military vehicles and troops. Current reports detail that there are 5 different Israeli military combat brigades based in Gaza for the Rafah focused operations, which are to push into the densely populated areas of the city. According to the FT, the way the military development is playing out does suggest that this operation is the most significant for the IDF for the last several months. The city of Rafah in Gaza is currently considered by Israel to be the final stronghold held by Hamas in Gaza, and this city now seems to be the final place to achieve the Israeli military goal of eradicating Hamas, which has been the sole premise of military operations since October the 7th. So a very important topic there to cover, and an interesting article which kind of sums that up and sums up what's going on at the moment. And of course this story will develop, and as a result things will affect this topic will continue to affect markets over the coming days, so make sure you're keeping your eyes on this topic. Pardon me for my itchy nose. That's all to talk about on the articles. Next is to talk about, of course, is the charts, which we do have quite a bit happening. What is that grammar? We do have quite a bit happening on. Now, to begin with, like always, we are beginning on the US 30, which has continued this kind of downward spiral, which we really saw start last week on Monday. And of course, on Monday and throughout the week, we continue to receive kind of US economic data, which painted this hawkish picture following the more dovish data that we did receive. So that was kind of, bringing us back on those previous gains made after, of course, we did see that US inflation figure come in below expectations, or at least show that inflation was on the decline. Now, as a result of, kind of this continued US economic, as a result of continued US economic data, which represents, kind of this more hawkish picture, we are seeing the US 30 sell off. And that's why we're now, and that's why we're seeing this not only on the US 30, but also on the US 100 and also the US 500. So this is certainly something that is spread across all US indices. Now, where is the kind of key areas to note as for the US 30? Well, ultimately, price did break down and now move below this key liquidity zone, which price was sitting on just yesterday and over Monday as well. And that's why in yesterday's morning market briefing, I did of course note that price was sitting just above this liquidity level and 50% Fibonacci retracement level. And so as a result, I was hinting towards the idea that price could use this level to move higher and move to the upside. But ultimately, of course, we have not seen that. Instead, we've seen price break below that level and now near that 61.80. And the kind of next key liquidity zone to note would of course be this one just sitting below that 61.80. So it of course will be interesting to see how kind of the price action on the US 30 does develop, as ultimately things are looking very bearish and currently no key Fibonacci retracement levels are lining up with those key liquidity zones. So stay updated on the US 30. Next talk about though is the dollar, where not much can be said really, so we don't need to cover it for too long, but seemingly price is kind of coming back on itself, or at least did yesterday somewhat, but really not much has happened since Monday, and price is basically where it started off for the week. So not much has happened so far. Of course, though, we are receiving some important economic data this week. Not today, but this week. So certainly that will affect the dollar. But for the moment, we're just going to have to be looking out for any key news points or political changes which may affect the dollar. So keep your eyes on the articles. Actually, that's all to talk about on the dollar, though. As for Euro USD, the same can kind of be said. Prices somewhat retraced back onto this area of liquidity that we've previously noted. Still not much is happening though. Ultimately though, it will be interesting to see whether price can continue to the upside after utilizing this area of liquidity. As ultimately on the upside, we do of course have that minus 27.2% Fibonacci retracement level, Fibonacci extension level, which lines up with that key area of liquidity. And because price is now currently kind of delving once again into this area of liquidity, it should be interesting to see whether price can then swing to the upside. As for pound yen, the same can be said as we did say in yesterday's morning market briefing, where price is just continuing this slow grind to the upside. We're not seeing very volatile candles swinging to the upside or swinging to the downside, but instead we're seeing this slow push further and further to the upside as price now does break above those previous all-time highs and that kind of previous level around 200.5, which price has now breached above and is somewhat holding above. So price is certainly on the upswing, and the kind of position for the market is extremely bullish, most certainly. The kind of developments that we have seen for price just over the past few years, to be honest, has just been absurd, of course, with this continued grind to the upside, this continued push to the upside, which has really grown recently, of course, due to the kind of changing macroeconomic climate in Japan. So certainly keep your eyes on pound yen as we do enter further and further into this uncharted territory with a lack of retracement, with no retracement to be seen so far. That's all to talk about on pound yen. Next talk about is Bitcoin. Which is somewhat retracing, consolidating at the moment. To be honest, not much has happened for Bitcoin since yesterday's morning market briefing. Price did kind of swing and, somewhat swing, I would say maybe, but not really. I mean, it's just some volatile candles mixed in there, but really price has stayed around the same level since yesterday's morning market briefing. So not much can be said for Bitcoin. Still keep your eyes on it though, because ultimately price is on the kind of upper areas of this recent range that has been formed, this recent area of consolidation that's been formed. So it is interesting to kind of watch this area and look out for the possibility of price breaking above and continuing this push higher. So keep your eyes on Bitcoin. Next talk about is gold, which is actually in a very interesting position, possibly is representing the most interesting price action of the day, after of course price did start off the week reacting to this key area of liquidity that we had noted as the kind of bottom area of support, which we expected price to make its way down to. Now price has reacted to that level and is now currently on this kind of upswing, where of course we're waiting for price to really interact with another area on the Fibonacci retracement table, on the Fibonacci retracement tool, or another area of liquidity, but not many can be noted just for the moment. Of course, key news with regards to the Fed's monetary policy and also world tensions greatly affects gold. So arguably the kind of news about Israel's operation into Rafah has likely influenced this upswing that we've seen over yesterday. And it'll be interesting to see whether that can continue to play out as a result of kind of, increasing tensions within the Middle East. So certainly keep your eyes on gold as we're kind of now nearing this 38.20 Fibonacci retracement level and key liquidity zone. That's all to talk about on gold. Lastly to talk about is oil, which has actually made a large swing to the upside over the past few days. So since Friday last week, we've really just seen this swing to the upside that, to be honest, we were kind of not expecting, because price just continued this break to the downside. But what we've seen now is price reach this bottom level, this key bottom level of liquidity around $81 per barrel, and it's now used that area of liquidity to swing to the upside in line with the growing world tensions to do with Israel's operation into Rafah. And as a result of that, price is now nearing this higher area of liquidity around $85 a barrel, not seen until really either the 20th of May or the 10th of May. So this area of liquidity, it'll be interesting to see how price does react to it after selling off 3 times from this area before. So keep your eyes on oil. That's all to talk about on the charts. So lastly to talk about, like always, is the economic calendar. We're receiving a great deal of data which we're receiving a great deal of data today, so make sure to listen out for all of that. Now firstly, we are receiving the Aussie inflation data we are receiving some Aussie inflation data today, as well as the Japanese consumer confidence figure. Added to that, we're receiving the German and French consumer confidence figure, as well as the Italian consumer and business confidence figure. Followed by that, across the pond, we'll be receiving the US mortgage applications figure, and back across the Atlantic, we'll be receiving the German inflation rate figure. So that's kind of the key, most important figure of the day to listen out for, where we are expecting an actual rise in inflation with comparison to the last figure that we did receive. And finally, for the day, we were having 2 Fed officials speak as well. So that's all to talk about on the economic calendar. We've got lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading day. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.